I would say the short answer to does this reflect undue complacency out there is not really. What the VIX is primarily telling you is what you already know, which is the market has been exceedingly calm. You have not had a jolt in a little while. The main input into the volatility index, which of course is kind of the market's best guess on how volatile the S&P 500 is going to be over the next 30 days, is how volatile the S&P 500 has been in recent days. Over the past 10 days, the historical actual volatility is about 8 on the VIX scale. So if you talk about a 3 to 4 premium on the historical volatility, maybe 11 or 12 feels like, kind of a fair level. So just below 11 is not really out of, kind of out of the realm of what you would expect with the market at its highs, a rally being kind of slow and steady, stocks up 6% or so in the past 6 weeks. So all this is to say, is it one of the inputs that say, wow, maybe traders are getting a little too comfortable here. Maybe people, as you guys were just discussing, don't see anything on the horizon that could create a little bit of a scary air pocket. Maybe you could say that it's one ingredient of a potential overbought condition that's building in the index in the very short term. But I'm not really seeing any broader inference here that says this is part of a kind of speculative run-up and traders are being reckless and they're not really looking at the risk side of the equation just yet.
It's not like all is perfect in market land. The number of stocks that are down from their 52-week high, and there are some big names on this list, Michael, I mean, I know it's the marquee names and the resurgence of the Fangs get the headlines. However, Newell's 59% from its high, L Brands 48, Ford 25, Win 24, Broadcom 23. Now, obviously, there are special situations there. Celgene 38, Western Dig, American Airlines, Twitter, Whirlpool, eBay, Harley, Cat, Walmart, Netflix, Starbucks, Facebook, IBM. I mean, we're talking about major double-digit declines from their 52-week highs. We're just not focused on it because we're still on the Fang high and the tech high.
Well, that's part of it. I mean, well, two things in response to that, Scott. One is it's never all well. Nothing is ever all well in markets. Secondly, the fact that you have huge divergence within the market in terms of winners versus losers and sectors that are up a lot this year and others that are underperforming is also helping to suppress index level volatility, right? You have a push-pull within the S&P. Low correlations among stocks and sectors actually kind of suppresses the overall jumpiness of the market, and that translates into lower VIX. So that, in that sense, lower VIX isn't saying, hey, things are great. It's saying, well, there's kind of these opposing currents in the market right here, and maybe it's kind of stuck or moving slowly for the moment. So it's interesting how a lot of big losers offsetting some big winners on an index level kind of keeps things a little bit calm, at least the way it looks on a day-to-day basis.
Carrie?
Yeah. So, Mike, on the comment about complacency, remember in the first half of the year, there were 36 days in which the S&P moved up or down 1%. And I think that compared to something like 8 for all of last year. So 2018 started out with a lot of activity. It's since really the beginning of this quarter when we began to see earnings come out that we haven't had the volatility. It's all been up. And that's in part because the numbers have been so good. Not just good, but better than expected. I mean, so who knows what happens in this interim period that we're coming up to next?
That's right. I mean, Carrie, you obviously have the support of earnings, the support of fundamentals, and also what happens during earnings season is the ones that beat a lot, the stocks go up. The ones that miss, stocks go down. On the whole, the index kind of stays relatively orderly, I guess you could say. And so I do agree with that. I think sentiment in general, because a retail investor, even institutional investor, it's building up toward a little more optimism. But in general, it's remained very subdued, certainly compared to the first time we got up to these levels in January. So I do think instead it all fits together with a market that has kind of slowly recovered in this direction. Also, there's one extra point, which is it's a little bit surprising that you've had so much volatility drain out of the market and the VIX kind of go back toward 10 just 6 months after you had this massive shock in the volatility trading space and all these products blew up and people who sell volatility for a living really got obliterated. So on some level, it's a little bit of a surprise, but not inconsistent with how the general market has behaved in the last few months.